Good morning, respected lecturer and my classmates. My name is Pravesh Negi. My student ID is 110451. And we are Group 4. We are presenting our assignment related to Burger Fuel Limited Group.
Hello, my name is Krish Kathiria and my student ID is 110423. Today I am presenting the financial ratio of the Burger Fuel. Thank you.
My name is Geeta and my student ID is 113509.
My name is Anaba. My student ID is 115025.
My name is Chuan. My student number is 105149.
My name is Jabal. My student number is 112821. I will be doing the conclusion of the presentation.
My name is Aman. My student ID is 110539 and my topic is strategic recommendation.
So today our group analyzed the Burger Fuel Limited, analyzed the financial performance of Burger Fuel Limited and past 3 years. So we'll start with the introduction. So Burger Fuel Limited is a well-known brand in New Zealand, based on Grumet's and burger restaurant chain founded in 1995 in Auckland. Over the time, the company has grown and become leading New Zealand famous company, and fast casual dining brands has expanded internationally, mainly into Australia and the Middle East. Also, the Burger Fuel listed in New Zealand Stock Exchange under the ticker BGF. The brands were known as for its premium ingredients and handcraft burgers and strong focus on sustainable and quality. Also, the Burger Fuel operates a mix of company and still maintaining brand and customer experience. This helped the main objective of our presentation to analyze Burger Fuel financial performance. We will focus on the profitability and the key components and 3 years sales trend of the company, and we will focus based on these analyze. We will identify key risk and profit of the company, and also give investment recommendation for long-term invest. So I have explained the overview of the company. Now I have to hand over to Geeta Rani. She will tell the key components of company.
Hi everyone, my name is Geeta. I will present the key components of financial statement. In this part, I have three statements: the income statement, the balance sheet, and the cash flow statement. The first one is income statement. We can see that in year 2025, the revenue is $23.86 million. In the same year, the net profit is $1.03 million. We can see that in year 2024, the revenue is peak, which is $25.95 million. After that, in year 2025, the revenue is slightly decreased. So the profit is followed a similar path. So this can show that the market is changing in year 2025. The next one is balance sheet. In year 2025, the total assets is $32.3 million and the shareholder equity is $9.9 million. Compared to year 2024, the assets and equity decreased compared to 2025, but the liabilities were well controlled at controlled which is 22.4 million. And the main cause of equity reduction is capital return to shareholders. The third one is cash flow statement. The operating cash flow is positive change, so it is very good sign. It means daily operation can bring in cash. The second one, it means like at the same time, investing and financing is negative. So it can show that this often means the company is spending on strategy and also returning value to shareholders. In short, the company can still generate cash from the core business. This supports operation, investment actions, and shareholder returns. So now I will pass to Krishna.
Hello guys, my name is Krishna Tiria and my student ID is 110423. Today I want to present the financial ratio analysis of the Burger Fuel Limited, who were established in 1997. And today we are generally focused on profitability analysis, operational efficiency, liquidity position, and financial stability. Let's begin with the profit because everyone are interested in the profit. So profitability analysis show 2024 our net profit margin at 5.11%, and then decline at 2025 4.20%. That's not a major decline, only a 0.81% decline because of the revenue and global recession. As you can see, after the COVID, all markets go up, and in the New Zealand market, 2023 are very high, 24 are also high, but after 24, New Zealand dollar are also declining from the 53 to 50, and that's why our profit also declining because decreasing of the sales. And the main thing our profit are declining because we are investing in our inventory to produce more burger, to produce more shops, and give them more franchises. So that's why. And also our ROA remains stable throughout the period. And so let's begin with the operational efficiency. Assets turnover improved 0.74% in FY 2025, indicating the better utilization. And overall operating expenses ratio remained a high 86%. That means let's explain with the example. So if we are selling the 1 rupee burger, if we are selling the 1 rupee burger, 86% and 86 cents are the cost of the burger, which includes rent, all of the expenses, and raw materials, salary, wages, and all like that thing. That's also include our inventory costings. Last year, as we can see the profitability analysis, we can invest a really high amount of the inventory. So that's also included in 86%. But the 86% are for only 2025. In 2026 to 2029 and 2030, our operational expense ratio remained around 75 to 77% because of the investment we are making in the past, and that's why a little bit loss we making in profitability analysis. Let's see the liquidity position. Extremely strong liquidity position at the time of the health and as compared to the market. Also market leader Burger King, McDonald's does not have that kind of current ratio of 2.22 Champ1 and quick ratio of 2.6 Champ1. Our liquidity buffer against the market volatility, it's very strong and very high compared than our market competitors. Let's see the financial stability. Mortgage and mortgage leverage with DE ratio are 2.71%, and our debt rates are 0 because our own investor and our own shareholder are continuously investing their money in our company for no debt, by the loan, no overdraft, and also the thing is our company are debt free. That's the main thing, and we are a little bit losses in this year, but in future we'll get more high return and very high efficiency of in operations and liquidity and also in profitability. Thank you very much. I would like to present the next part. Sean Ongo. Yeah.
Hi everyone, my name is Anamba and my student ID is 115025. Today I'm going to talk about trends and patterns. First, revenue and profits. As you can see on the presentation, a key insight is a performance downturn in 2025. Both operating revenue and the net profit after tax peaked in 2020 4. Then in 2025, revenue fell by 8.1%. Net profit after tax dropped by 22.6%. And this suggests margin pressure. In simple words, it can be understand costs may be too high or prices are harder to raise. Second, EBITDA. EBITDA and total assets. EBITDA stays relatively stable from financial year 2023 to 2025. This is a positive sign. It shows the core operating performance is quite steady. It also suggests the company has some ability to manage margins, but total assets decreased successively in 2025. This looks like strategic assets reduction after the capital return to shareholders. So it may be a planned move, but not a sudden move. Last but not least, to sum up at this section, 2025 shows a weaker revenue profit but a stable EBITDA. This is the biggest. The company is not in crisis, but it needs attention. Now I will pass to Chuan. She will talk about investment potential.
Hello everyone, my name is Chuan He. My student number is 105 and 141. I will talk about Burger Field's investment potential with key strengths and challenges. First, let's take a look at strengths. Burger Field is a strong brand in New Zealand and has been in market for about 30 years. So liquidity is also strong. The capital ratio is 2.22, and the company has about $4.8 million cash reserves. This business can pay short-term bills and handle market changes. Also, the company follows a no material debt policy, which helps reduce financial issues and operational flexibility. Now, I talk about challenges. In financial year 25, revenue fell by 8.1%. Operating costs are high, around 86%, and this limited profit growth. Costs are also a big issue. Finally, growth may be limited because most of the business is still in New Zealand and Middle East contribution small, about 4%. Now I will pass the last numbers for the recommendations. Thank you.
Good morning everyone. Today I'm here to explain about strategic recommendation. There are about 5 strategic recommendations. The first one is enhance cost control. The second one is optimize digital challenges. And the third one is explore growth markets. And the fourth one is migrate input cost. And the fifth one is reboot finance planning. First we talk about the strategic recommendation. These all are based on the financial position and data analysis of the Burger Field company from 2023 to the 2025. Now we go to the number 1, enhance cost control. It's very important for the company to control their costs as they run on the high operation expenses, which make it difficult for the company to generate the profit from the revenue. As you can see over there, we have the revenue of about $23 million, but we only got the profit of $1 million from that. That's too low. So tighten the expenses will improve their ability to generate more profit. The second one is optimize digital challenges. Burger Field has already invested on their digital platforms, which increase their loyalty to the customers. As everything is online, they will also able to target their sales and the profits by including the online apps to their customers. It also help them to reduce their expenses as it is very low cost for the company to run the business online as compared to the in-store business. And the third one is growth market. By exploring the growth market, they are able to expand their business as depending upon the New Zealand market is not stable for the business. By going the wider, they are able to get the more revenue, which will help them to generate the more profit. And the fourth one is migrate input cost. By managing their expenses, they are able to generate the more profit, as they have the high operation expenses like wages and the cost and the store running, which make it difficult for the Burger Fuel company to manage their position. And the fifth one is good finance planning. By reviewing their financial position day by day, they are able to improve that by conducting the daily review for the financial position. It would help them to implement the monitoring to address the issues, but the issues they are able to apply the changes more efficiently if they are able to know about that earlier as compared to the later stage. And that's all about that. And now we move to the conclusion.
Job, I'm doing the conclusion of the presentation. So in conclusion, Burger Fuel shows a strong, solid financial health and they managed to stay profitable for 3 consecutive years through 2023 and to 2025. And the liquidity are pretty good. They have a really healthy cash flow and high current and credit ratios, so they can manage short-term bills and the uncertainties. And that said, they still have some challenges because their operating costs are always pretty high, and their growth are very limited. They do operate internationally in Australia and Saudi Arabia and the UAE, but most of their revenue still come from New Zealand. So they have to do better on the cost control and expand their market internationally. For the reference, most of our data come from the Burger Fuel annual reports from the New Zealand Exchange and supporting database from the Stock Analysis Financial. Yeah.
Thank you. Just can I say the overview of the all slides? The main thing are Burger Fuel are not small but small business. They are very high revenue business. The thing is, when we are research about the Burger Fuel as a financial assistant, and we can see the 2023, 2024, 2025 revenue, those previous revenue are continuously seeing and speaking. If the Burger Fuel are getting the spending more money on marketing and also spending more money on inventory, and as well as spending more money in the revenue style business and little bit on inventory system and databases of the to run a website and run a servers and run a apps. So Burger Fuel also will give a high potential to give a high profit, and also who knows, Burger Fuel will make a new McDonald's of the New Zealand and new McDonald's of the around the world. So thank you very much. This is our slides and this is our presentation. So all good. Thanks.
Please go to the profitability. That means the key components of financial statements.
The second.
The cash flow statement shows the percentage. So, what do you think about the positive cash flow, operating cash flow? How it is like? Is it beneficial to the business? And what are the benefits they will get it from the positive cash flow statement? Any one of their group members can answer to this question.
I would like to give an answer of the cash flow statement on the positive operating cash flow ratio. So as you can see, all businesses have cash flow, but the thing is, sorry, I want to say the positive cash flow are good for all of the business. And can you repeat the other side of the question, ma'am?
Yeah. The business, like Burger Fuel earned the positive cash flow from operations. So, how it benefit to the business? So the positive cash flow always give benefit to the business?
Yeah.
Just give any 2 examples for the benefits.
For the easy solvency of the cash flow positive to help to business, and also if we have cash flow in our business, so we can order continuously to, what did we say, the raw materials, and also if we have continuous cash flow, we can also pay our debt to our investor.
Any other benefit?
We can invest in our
Yeah.
company, so we can get more cash flow with that.
That means whatever you have the excess operating cash flow, you
Yes, we can
invest
invest
it.
in that and
Yeah,
then
invest
get
it
more.
in the same business, or you can invest it in other resources. Very good. Okay. So please go to the recommendation. Yeah, the recommendation slide, the strategic recommendation. Okay. So you mentioned about the optimize of digital channels. How it leverage the business growth or the sales growth? Could you explain how these digital channels, help to leverage the sales growth?
Of the
The sales channel can be advertisement, advertisement.
Not the advertisement. Okay, you can take the advertisement. Yep.
Through the channels. So everyone, the customer can see the advertisement in channels through the digital, and they better know about the company and the product of the company.
Do they order, that means they are using the digital channel, that means the online, to make the orders?
Yes, ma'am.
Yeah.
Okay, so that is one of the factor. when
They are
you
able
take
to,
the sales.
they are able to
They
improve
are-
the customer convenience by, they are able to improve the customer convenience by cooking their order, like delivering them through fast. That's and it also increases the loyalty for the business. They will be able to build the loyal customers.
Okay, so any other benefits through this digital leverage? Except the sales growth. So whether you mentioned their customer loyalty, could you explain that in detail?
for the customer loyalty, when they are coming to the website and buy one of the product, more than $20 and less than $5, they gonna reward up to what amount they buy, and be consistent to buy from the Burger Fuel, and then around 500 and 600 point, like a Woolworth, they have 2,000 point reward system. When they get 2,000 points in their rewards app, they'll get the 15% voucher. In Burger Fuel, we didn't copy the Woolworth system, but we are inspiring from the Woolworth system. When they get 500 to 600 point in the app, and they'll get automatically one of the 2 drinks and also one of the 2 burgers, whatever they like, up to $15. And if they want buy more than $15, they get also $15 rewards on their purchase. That's our loyalty program for the loyalty customer only. And if someone want to join loyalty customer card, we are also giving the loyalty customer card up to basis of the subscription. There are so many also like we can use the example of the Netflix. They are charging the $15 or $17 per month, and also the biggest example, DoorDash. The DoorDash are charging us $8 or $9 a month for their loyalty customer, and then they are giving a free delivery to the whole month. For us, we are charging around $9.99 for the loyalty customer, and we can give a first chance to use the coupons and giving the coupon codes and all of the things. So that optimized digital channels helps us to give a loyal customer and also customer reputation ratio.
There's a question from one student, Vivian. Yeah.
And it was that you have tell that the major as the your company has been increasing, but the operating expense in the 2025 has been depreciating. So what's the major factor you have been applying? You are telling that your company is in the profit, but your operating expense in the 2025 is, I'm so sorry. In 2025 it's decreasing, as in 2023 it was the same. In 2024 it has gone up, and in 2025 you can just refer from the second or third slide. Operating.
So the thing is, the main thing is the
If you want, you can go to the slide.
Sorry.
Yep.
The main thing is, I have also explained in the operational ratio and profitability analysis. We are investing highly in 2025 to inventory in our product line, and for also website, and giving a better data server to give a high efficiency on our website, because when the website get more customer, the high data center needs to the company. And in 2025 our profit are little bit less compared than 2023. But the thing is, we are generating little bit more profit compared than 2023. But I have already explained, we are investing in our company, in our data server, and also in our operating system, in our product manufacturing. I have also mentioned that in my slide. So did you get your answer, or I will explain another way?
Thank you. And one another thing, in the last strategically, I just want to ask that what is the exact meaning of robust financial plan?
Robust financial plan, well,
In the sixth slide.
so the robust financial planning, the main thing, implementing regular performance monitoring to address issue and weekly. So we are calling this system to pick and solve. If we find any issue, we are good to know we have issue. So what the thing? We have issue, what are the issue, and what are the things behind the issue, we can solve it. The main thing are robust financial planning, and also this will help to get a financial goal to achieve, and good to our investor and also customer and for the company.
Can you give me an example?
For the example, if you are ordering in Burger Fuel and you can buy burger around $9.99, the major burger, and if you get a review on Burger Fuel and also complain to us and says the burger are not good, I don't like the taste, I am the regular customer of the Burger Fuel. But today the burger are not made for the past 2 or 3 times as like. But the thing is, you can give a feedback to us from this platform, and also we are receiving feedback from that platform. We have to solve the issue. So that's the main thing, and that's the example. Thank you for asking the question.